something as boring as gold ran up like 24x. Now, silver had a 33x run. So gold had a 24x run and silver had a 33x run in 9 years. In 9 years. It's almost like we're in a replay of the 70s right now. Guess what happened in the 70s? Most people are calling for a crashing oil right now. I'm not in that camp. I think oil at 70 something is bottom. I think it's never going back to that $60 area where it was before the war. Just because you open up the Hormuz Strait, that oil facility, once you bomb it, it takes like 2 years to rebuild it. So even if it's fully back operational, every oil well in the Middle East, some of them are only going to be at 50% capacity. Plus, as I said, the US SPR reserve. US SPR reserve is basically half drained. So US, if the president does anything responsible at all, it'll have to buy 350 million barrels of oil back from the market to refill what's empty. What Trump and Biden emptied, Trump's going to have to buy it back now from the market. So now you've got less supply than before. That problem doesn't get fixed until for about a year, 2 years out from now. And you've got more demand from before because not just US, Europe, Australia, Canada, maybe not Canada, China, every country, Japan, Korea, certainly, every big country in the world and small country, Philippines, India, have run low on their oil reserves. They all now need to not just buy for everyday usage for their cars and electricity, they also need to buy to refuel their strategic reserves. No one wants to leave that empty again. So imagine more buying pressure and less supply than before. That's going to, I don't think this is the end of oil. So I think that's going to push oil prices back up again. It means inflation will look like it's going down for the next 1 or 2 months. But once oil makes a U-turn or a V-turn, could be a V-turn or a U-turn, and comes back up again by the end of this year, like say September, maybe earlier than that, August, September, October, then basically inflation is going to be a problem. In the 1970s, you had a few oil shocks. It was Israel that had the 6-day war with like about 8 or 9 Muslim countries around Israel. And that happened like 2 or 3 times. And because US supported Israel, like it is doing right now, so all the oil countries got very angry with it. And so they led by Saudi Arabia, oil countries went into what they call oil embargo. Oil embargo, meaning like they're not going to export oil to the US, so US had to rely on its own oil. Oil price in the United States shot up 4x. Oil price went up 4 times. Can you believe that? In like 2 years or 1.5 years or 1 year, whatever. And then after that, inflation shot up to something like 15%. Imagine oil price at the pump. Imagine it was like $3 like 3 months ago. And by Christmas, it goes to $12. Can you imagine that? That's what happened in the 1970s. They call that stagflation. Gold bottomed in 2015. In 2015 at around 1,050. That call it 1,000 even. If gold has a 24x run, it goes to 24,000, right? 1,050 times 24 is just over $25,000. And it's 4,300 today. So imagine gold goes to $25,000. It's crazy. So gold and silver can run really hard. Initially, it might actually go down because there's always a short-term effect and the long-term effect. The short-term effect is that gold goes down in the short term because the high inflation means high interest rates. High interest rates, some people sell their gold. But if inflation doesn't stop and it runs for like a few years, then people are like, oh my God, I don't trust the US dollar anymore. Then what's an alternative to the US dollar? Nothing. No currency is an alternative to the US dollar except gold. The short answer is depends on how bad inflation gets. If we have a normal inflation like what you had in the last 10, 20 years, like inflation goes to 3-4% and Fed hikes rates and brings inflation back down, then yeah, I can see gold having a pullback. Gold actually probably doesn't go up, it pulls back. But if you're talking about 1970 style bad stagflation, then yes, gold and silver absolutely takes off, absolutely has like a 5x run, 10x run, 20x run. Energy stocks certainly would benefit. But as we know, energy stocks are huge. Like if ExxonMobil makes 15% in a year, people applaud that and says, yeah, I'm up 15% on ExxonMobil. But that's because ExxonMobil will still pay out like a 3% dividend. So you're getting paid like 3% dividend, which is the same thing as putting money into a bank. You're getting paid an yield. And then, unlike a bank, which hands you your money back, this ExxonMobil actually hands 15% extra back to you. So Warren Buffett loves, these sort of oil stocks. From memory, he bought Occidental, which is an American oil company. The symbol is OXY. He's held that for a number of years, and I've been telling my folks in our Discord, to get into that as well. So check out our Discord if you want, because we've been talking about that for 2 years. And on top of that, I think Warren Buffett, just before the war began, also bought into one of the big two. It's either ExxonMobil or Chevron. He bought, I think it was Chevron. He bought that as well just before the war. But what's more profitable, what's more going to be life changing, I think it's gold and silver.
If the 1970s really are repeating, the people who position early are the ones who win. That's exactly what we break down inside the community. The macro shifts, the setups, and where the smart money is actually moving. We run a team of analysts, daily analysis, and a one-day free trial so you can see the research for yourself. Links in the description. We'll see you inside.